All right. All right, we're rolling. Hey guys, how's it going? This is Hala Pablo. And I thought we'd do sort of a continuation of what we looked at yesterday with Bitcoin and the macro in micro wedges, aka countertrends. That it's currently trending in the top portion of which in the overbought section of the wedge, overbought on the macro. I have this on the 1 day, and this is the micro down here. I have it on the 15 minute, so it's even smaller, lower time frame than it was yesterday. I believe yesterday we had it on the on the 30 minute, and it distributed a bit or had a little bit of a pullback within the wedge. Remember, we were looking at this area yesterday. And remember, I said I forecasted a retracement from the micro trend resistance back into the channel, aka wedge. Now, because of the differences of these fractal ranges, the top is a daily, and the bottom is a 15 minute. That's a pretty wide. That's a pretty big difference between times, wouldn't you say? And so this one on the bottom is going to move a whole heck of a lot faster than the one on top. Since each candle here represents 15 minutes, each candle here represents 24 hours. So you do the math. And yet, they are in similar trading patterns. This whole area, this wedge here that we see, or this rising structure, it kind of looks like a parallel channel, but it's really a wedge, is encapsulated just in this area here, this area where there is a micro rally. I know I circled this whole top area here, but we're right in here. So a circle within a circle. All of this whole area here is taking place right here. Okay? So it's important to look at price action through the framework of different times. And so that's why I started coming up with this fractal range analysis system, so I could look at both ranges simultaneously, and not just anywhere, but in certain key areas like where we are right now, where the price is trending within a structure. And I talk a lot about the geometric structures of price action, whether it be rising wedges, falling wedges, bear triangles, bull triangles, rectangles, and so forth. There's a few of them, and how important it is to begin to familiarize yourself with these patterns, and to include tops and bottoms. And you could look at them. What's even more powerful is if you look at them, you begin to look at them simultaneously on different time formats, different time frames, such as the macro, the daily, and the micro, the 15 minute. And if you get them right in the right spot, you could see the patterns, you could see the trajectories beginning to almost replicate themselves. Why? Because they're fractal. That's what fractal things do, right? Things that have a fractal nature. If you break them down to a smaller component of the whole, you'll see the macro replicated on the micro. It's like a mirror in a mirror in a mirror in a mirror in a mirror. There's certain things in nature that are like that, right? Like snowflakes. If you take a snowflake, each snowflake's unique, correct? It's like price action. No two ranges are ever unique. Are ever the same, cookie cutter the same in price action. Each one's unique. And yet if you break off a piece of it and you scrutinize it on a micro format, you're going to see basically a crystallization of the macro that you just broke off, mirrored within the micro. And we see that in the markets as well, certainly in the markets. And that's why Elliott Wave and Wyckoff, to me, are so poignant and work so well because of the fractal nature. You could use them on any time frame, and the results are going to be pretty accurate. So that's what I endeavor to do with the fractal range analysis. And you see, like here on Bitcoin right now, I want to use it on Bitcoin because really Bitcoin's the main thing. Bitcoin's the big dog. It's the king of crypto. And wherever Bitcoin goes, usually the other alts are going to follow to certain degrees. So it really behooves us to look at Bitcoin more so than any other coin, unless, you're wanting to swing some altcoin, which is fine. We could also do tech analysis on the certain alts, but we're going to find so many of them in similar trading patterns, indexed more or less to the price action of Bitcoin. So I wanted to talk a little bit today about the micro format here. I circled this area. This is where we were yesterday, and sure enough, we marked down to the micro. Now this is the micro wedge. We'll call this the micro wedge, and we'll call this the macro wedge. And now in the micro wedge, we marked back down to the wedge support. We'll call this the micro support, the trend support, micro trend support. We marked all the way down to the micro trend support, and we see here on the macro that we didn't really move that much. That's okay. That's to be expected because of the time differences, like we just talked about. What makes the micro so relative in analyzing in conjunction with the macro is, since the micro moves so much quicker, it goes through the different junctures, like we see, like the resistance, and then we have mid-range or mid-wedge here, this dotted yellow line, and then the support. If it's going down, if it's like distributing like it did yesterday, and it came all the way down to the support and then back up, it's not really going to make a big difference here, is it? Because all of this is transpiring within this candle. Maybe one or two candles. Well, it's a daily, so it's all within this one candle. But let's just say that this, see it marked back down, and we came up. You see how it hovered here at like wedge midpoint and then went down and then came right back up again, and basically nullifying all of this, which isn't going to alter the trajectory or the opening and close of the daily candle that we had yesterday, which is why it was still a bull candle, because it came back up. But now you see that we've come back down. We've come back down again. We've come through channel midpoint and back down to micro trend support here. And now, depending on what this does here, if it further retraces, let's say it goes through trading range support. Now this, you see the difference. This we have a horizontal line, this white line. This is the actual trading range resistance, and this is trading range support. We draw them from the buying climax and the automatic rally of the Wyckoff, if we want to look at this as a new range that came up from this bottom here on the micro, say here. So if it comes down and say it goes through trading range resistance and into the actual range, intra-range, we've already broken out of this wedge and we're back into the range now, then we can reasonably expect up here on this macro wedge for the price to retrace as well on the next few daily candles to come back down in this area, either to the macro wedge midpoint, and even macro wedge support here, which would put Bitcoin down in the 30,000s again, which seems to be where we're headed, unless this marks back up again. It doesn't break structure, but marks back up and then takes another stab at the micro trend resistance, and then somehow is able to flip it to support and go on to higher prices, maybe in the mid 40s, or back up to 46,000 or whatever. Then we could see this. We could see another UTAD happening here, where we had the horns of the devil appearing at here on the macro. Remember, we talked about this. I'm trying to get some of this out of the way with the UTAD. This second this second rally that came up here. Why isn't my... Here we go. Here, this UTAD, which turned out to be an actual a bull trap. This was basically the spot ETF approval here and the FOMO pump that was generated from it. And as quickly as it went up, it retraced back down into the wedge. But that was to be expected. That was definitely a sell the news event. But now that we've come back in, we've touched. Yesterday we hit. Was it the day before? We hit the wedge midpoint, and since then we've had another rally back up to retest the macro resistance line here in this wedge. And so now what we're monitoring on the micro is the battle that's being waged from this, what I believe is an LPSY, this rally here that we saw to try to retake resistance. If it's able to, and it somehow is able to prevail on the micro, then we can see this going back up into the macro as well, and having another rally that would, I don't think it's going to transcend the wedge, but we could definitely have another rally that goes back up into the mid 40s, if not higher, before finally the conclusive sell-off that we're going to find. Indeed, we're seeing volume. We saw supply volume emerge on this, what I thought was a devil's horn in the micro. It turned out to be a 4-crown, which is another type of top. Incidentally, I'm going to do a video. I was talking to some of the guys on my group today, a video on pattern recognition for tops, since we see so many of them in these distribution and redistribution ranges as we peak out on this counter trend rally that we've been in since last November. It's a good time to learn counter trend tops before we embark on the bull reversals, which are going to come either later this year or early next year. Just depends on what happens after the halving event. But anyway, there's different kinds of tops, and this pretty much mutated into a 4-crown. Nonetheless, it went back down again. That's what we're looking at right now. Yeah, we see these things transpiring all the time. But this basically, we had supply coming in here, which brought it back down, and then we have another considerable above average supply bar that came in that brought us back down to the microtrend support. So that's what we're seeing. And then we look up also on the macro, and yeah, this right here, this is a predominant supply bar, which is also a very, very strong bearish indicator that we've arrived at the top of this area here, which did turn out actually to be horns of the devil. And then we have this LPSY taking another stab at this lost support line. I don't know if it's going to be able to handle it. We have, if you see down here, demand volume decreasing when it should be increasing, since we're approaching a very, very important resistance line that the bulls desperately need to take if this is going to continue on the upward trajectory. But if this goes back down, then if this is rejected here, then we can expect the price on the macro on the 15-minute to continue to fall and go back down to where we talked about, into the range, out of the wedge and into the range. And then we could draw the 0.5 Fibonacci, and then all those things come into play, and that's going to determine how deeply we fall back into the macro wedge. And then if we go down far enough, I contend that we're going to be magnetized. We're going to be drawn to the macro trend support, and that's what's going to bring Bitcoin back into the 30,000s. And then if we break here, then we talked about the wolf wave that we calculated from the 1 and the 4 could ultimately bring Bitcoin back into the 20s even. It just depends at the time. There could be a lot of FUD entering in. I think the FUD is coming. Certainly, if we start retracing here considerably, FUD is just going to explode, and there's going to be a lot of sell-offs, a lot of institutional sell-offs, and calculated because they need the liquidity up here to buy deeply down here. So, like I always like to say, don't be the liquidity provider for these guys. Don't be the prey for the whales and the sharks. Instead, learn Wyckoff and do what they do. So that's all I got right now. If you guys got anything out of this, like, subscribe, consider joining our trading group. I'm very active in it. I try to update everyone, and we have good chat. It's it's Discord chat, and you could send me your coins that you like, and I'll take a look at them and give you personalized information and technical analysis as I have time. And it's just a really good way to just up your game in preparation. Like I say, this is the bear market. This is a bear counter trend. This is the perfect time to learn how to trade, to learn these patterns, to learn Wyckoff, to learn Elliott wave, to learn VSA, to learn Wolf wave, to learn all these things, fractal range analysis. If you could do it here, and you could learn how to do it properly here, then in the bull markets that are coming, you're basically gonna be able to write your own checks. It's to score those triple digit gains that I make weekly during the bull markets. So anyway, check us out through Patreon, and if not, you could still learn a great deal just watching these videos as I have time to make them. I may not have time later to make as many, so just keep that in mind. But in the group, you're always surrounded by guys like me and others who I've trained and who've come in with their experience, who are skilled in Wyckoff and in Elliott wave, and they can also help you. So it's just a really, really good community. So, oh, and by the way, it's come to my knowledge that there's some entity stolen my identity and is going around soliciting people on behalf of Hala Pablo Trading Group. If you get a DM or text message from anyone wanting you to join a group and they're claiming to be me, it's not me. All right, it's not me. I'll never contact you. I don't have time for any of that. I never do it anyways. I don't solicit. I don't need to. I don't shill. I don't need sponsors. I'm certainly not going to DM you. So just please be aware of that. Don't get scammed. So you come to me. If you want what I have, you'll come to me. I don't go to you. So that's just how it is. So, all right, guys, with that, I'm going to let you go. This has gone on 17 minutes. Boy, I'm long-winded. But it's all good. It's good info, right? All right, guys. Well, I'm going to let you go. Safe trading. Strong hands. Keep your eye on Bitcoin. And we'll meet again soon. All right, guys. I'm out of here. Bye-bye. Adios.